What is good, NIO family? It's Rey-Jay back with another video, and in this one, I'm going to be talking about the one and only NIO stock, what you should be looking out for the future. I'm also going to break down what's going on with the overall market that's actually causing us to see this big crash right now, from the futures to everything going on all over the world. And I also want to talk about why on earth, despite all the red we're seeing in the markets, this is not the end of the world. It's not the end for NIO. I'm still very bullish for the long term. I'm going to show you exactly why. Now, before I break anything down, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Don't take any of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $2,000. And the best part is, any of these 12 free stocks could be a free NIO share, a free Tesla share, or a mix of all of them. It's a limited time offer. The offer ends in just one day. So please check it out before they run out. With that out of the way, let's get on with the video. So NIO is down 10% for the day. If you're looking at SPY, it's down over 2%, which is actually huge for its standards. If you look at the NASDAQ, it's also down almost 3%. So we're seeing tech stocks, futures, almost every single stock out there taking a huge hit, and this did cause NIO to crash as well. So why is the market crashing? There are many reasons. Firstly, we have to talk about Germany. They reported their inflation rate at 10%. That's right, double digits in September. Despite how manipulated this data tends to be all over the world, we're still getting double digit inflation for the month of September for the annual reading. Very bad for the markets, not really good for Germany and Europe as a whole, the EU. On top of that, we're seeing a lot of fingers being pointed at the Fed right now because we have so many officials speaking. We had Bullard speaking as well, and he mentioned that right now the markets are starting to price in what the Fed is doing. And he did mention that there are going to be more recessionary fears, even though like we already knew this. The Fed is kind of like repeating things we already know, but the market is still reacting to that. Now, from the English side of things, we're seeing the Bank of England kind of like wanting to interfere with everything going on in the bonds market by printing more money, but they're simultaneously raising rates. So I found that pretty funny. And this should have been something that could have caused like a dead cat bounce or something like that. We didn't actually get that bounce. We started to get it, but then the market just ended up taking a huge hit, especially after this big piece of news as the US jobless claims hit a 5-month low, which is not necessarily the best for what the Fed is trying to do. So, what this essentially tells us is the fact that right now, employment in America is relatively strong. Despite everything going on, it still is relatively strong. This is because it appears that the labor force participation rate, is actually relatively low. This means that there are less people available to work in the US relative to before. And as a result of this, there are less people actually taking unemployment, and there are more people out there in the workforce compared to what we typically would see during a recession. And the Fed tends to not like this. The Fed wants us to actually experience some pain to really slow down that demand. Now, seeing gas prices go up across the USA, whether it's like Ohio or California, that's a sign that inflation may not actually start to be coming down as soon as people want it to. And we could actually get another high reading for September, in my opinion. So we'll have to wait for the data to come out in a couple of weeks, but I just want to put it out there. It's not the best of signs, guys. And then in China, we have more lockdowns again. I know this is just going on and on and on forever. Once again, not good for the economy, not good for China or even like the global state. So it's not very good to see things like this happening. There's just so many things happening all over the world, and the feds all over the world are really reacting to these changes, particularly the ones in the USA. We are now notorious for being a lot more hawkish than some people would have anticipated. And on top of that, we're starting to see housing and the commercial banks taking big hits as these rates are continuing to skyrocket. So as a result of that, looking at NIO, what does this really tell us for its future? So NIO's overall margins may be affected by the lockdowns and the slowdown in demand in China. And on top of that, if you look at the price comparison, now NIO is starting to really take that hit after the SPY has been dropping pretty hard and the overall market. The price price ratio is starting to drop, which is once again a bearish indication. And then looking at other very key things. You could see Fridays tend to not be as great for NIO, especially Thursdays. So I'm hoping maybe a slight bounce for tomorrow, but overall, I'm still net bearish, and I do believe we are set to make new lows. The one thing that's starting to scare people, guys, about SPY is the fact that the SPY just broke 360. We actually hit the 350s today, right? So we're seeing short interest starting to go up a bit for NIO. Once again, the shorts are coming in, and there's just so much manipulation that really continues in this stock and across the entire markets too. NIO is dropping on high volume. Once again, not the best of signs, because this really shows the volume factor is not really working in NIO's favor. Once again, looking pretty bearish over that. And right here, short volume percentage is going up. Like I mentioned, the shorts, the bears are gaining control. So this is all just for the short term. For the short term, the market's taking a hit. NIO has lots of shorts coming in. All these things are really affecting the share price. Despite that, NIO is still doing some very strong things when it comes to fundamentals. So fundamentally, NIO is very strong. Fundamentally, NIO is doing amazing. You guys have to remember that. When you look at what's going on, we're seeing NIO announcing their collaboration with the Danish Society for Nature Conservation. So it really shows their purpose to not give up. I do anticipate high deliveries, really good growth, new technologies, AI technology, new models coming out. So I'm still very bullish for the long term. For the short term, it looks like NIO is not done yet. The Nasdaq, the SPY, they're all taking hits. One big thing about SPY is look at this. It's continuing to make these new lows. We broke 360. Not a good sign, in my honest opinion. What does this mean for NIO? NIO has a big red candle. Once again, those are not very good signs. We're not showing signs of reversals from here. And it looks like we're continuing to just plummet down. And if I'm going to be honest with everyone, one thing I mentioned that was a possibility. So in my previous videos, I was talking about how NIO would fill its gap. That was like right here. We ended up filling the gap. We had another one down here, which NIO ended up filling. And now the big one that we actually have is all the way down at $13. So if NIO continues to take these big hits, if the market continues to drop, which it likely will, especially going into like the first week of October, it's very possible NIO gets dragged down too, and we could see NIO hit $13. I know you guys don't like to hear that. I know you're very upset over that, but look at what happened the last time this happened to NIO. Because you have to remember, the SPY is making new lows for the year, but NIO is not making those new lows just yet because we're still at 15. Our low for the year was like $11. So my point is, there is some relative strength still there. Now, this kind of is starting to look at distribution, meaning institutions are going to maybe start piling in to the positions at these low levels. So, what I'm thinking is, and this is not financial advice, but a very good buying opportunity is coming. Look at this buying opportunity right here. When NIO hit $11, it actually ran all the way up to $24 a share after that when the market started to rally a bit. So my point is, this is a very good buying opportunity for the long term, in my honest opinion. Now, I'm not saying you have to do this, but this is just a big opportunity. I'm actually excited about opportunities like this. It's good to start dollar cost averaging. So I'm going to be paying very close attention to NIO when it gets to that like 13 level, or maybe even like the 12s. That's also very possible, but 12 to $13, very, very good buying opportunity in my honest opinion. And if it does drop a little lower than that, then I'll just dollar cost average, right? Very good strategy right there. And in my honest opinion, more downside does still seem imminent. So for tomorrow, NIO could get a small bounce. The market could bounce just a little bit, but I'm just not as confident in the bounce really lasting. What I think is going to happen is we might get a slight bounce to push up. NIO could get back into the like low 16 level, so 16.12, maybe even 16.65. Then after that, we might get a big rejection, and the market could continue to drop from there. And NIO could close kind of flat, but then over the next like couple of days, couple of trading days for next week, I do see NIO coming down lower, guys. I have to be honest with everyone. The 14s are most likely going to come very soon, so please be ready for that. All right, a small bounce is normal, completely fine, but that doesn't change the fact that NIO looks very bearish right now. I'm so sorry to say that, but I'm excited because good buying opportunity for the long term. I'm a long term holder. I believe in the company, its fundamentals, and in the future, it will prevail when the next NIO days come, when the market recovers, when the bull market starts. I'm going to become very bullish. I'm going to start buying like crazy. I'm already starting to buy these dips, and I'm super, super excited. Once again, not financial advice. Thank you all for listening. Please remain calm, cool, and collected, and I will most definitely see you guys in the next one. NIO to the moon because the long term future is bright, and peace out.